Yo, 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 hey currency traders, time to get going. Gold, oil, dollar, yen, Swissy. Anything else? You. Shh. Hey, good morning, everybody. Good morning. All right, today we're going to do some currency trading. That seems pretty good. The world's moving. The world's waking up, right? The sleeping giant has awoken. Summer is almost over. Time to get on with the rest of the year. Things are just starting to shape up. So I'm pretty excited about how things are, like I said, waking up. It's pretty scary to have a 10-year T-note at 1.52, but what am I going to do about that? And of course, we think Fed's going to cut a couple more times. Where is the 10-year going? 1.0? Wow. I mean, that's crazy ridiculous, right? Like, I swear to you, and I guess I'm not supposed to say things like this, but I swear to you, there was a time in my life where I used to do speeches where it was impossible for the 10-year T-note to drop below 2.0%. And I'm like, oh, it has to do with Newtonian physics. Sounded really good. So anyways, it's been 10 years now, and we're practically below 2.0 the whole time. Just, I'm telling you, very remarkable. Very remarkable. There's no way when we were at 3.2 on the 10-year T-note that I thought we'd be back at 1.5. I thought, honestly, we'd never see it again. So here we are. Room for adjustment anyway, so that's why we're here. By the way, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being here. I'm here to help and share my experience with you, the hopes that you'll find some nugget of information that will help you become a better trader and feel more confident in trading. Obviously, a broker is going to want you to open an account with them and do some trading. So the idea is maybe some education will help you move forward or bring some consistency or just chip away at the loneliness or whatever. But the best customer in the world for a broker is one that can actually trade successfully and profitably for years and years and years and years. And so that's what we hope for you, that you become a successful trader. You trade for years and years and years and years, and that Trader's Way is your broker. And maybe you start just to pay it back because you really appreciate these webinars. Not bad, right? Based a relationship on loyalty and respect. That's what Trader's Way wants. So hopefully we can get that. How do you get involved? Open up a trading account at TradersWay.com. Make sure you subscribe to the Forex.Today YouTube channel. If you do and you still don't get notifications on a regular basis, you can also go to twitter.com/FXBootcamp, and you will get a tweet when I start the webinar. So that's a great resource if you want that. If you want my chart templates for free, you can click the link below the YouTube video and download my chart templates for free. Like, there's so much going on. If you want video training, you could go to FX Bootcamp. If you need performance coaching, performance coaching, like hardcore human-on-human performance coaching, that's live.fxbootcamp.com. So there's lots of resources out there for you. So get involved and treat everyone else in the chat with respect, and I think everyone will be happy. So without further ado, Andrew says, Wayne, are there better sessions for trading any of the pairs? Sure. How about Asian pairs during Asia, European pairs in Europe, and North American pairs in the North American session? How about that? Chuck Duck says he got the YouTube notification immediately today. Right on. Crypto says, morning, Wayne. Hey, CR. So anyways, cool. I hope you're happy. I feel really good these days. I have good spirit in my belly. I feel like I feel it's more of a feel than a think. I'm used to saying think, but I feel good, like good things are happening for us and for you in particular. Like I think a lot of you are just starting to either turn a corner or stabilize. And I'm looking forward to finishing grad school in less than a year, and maybe we can start meeting up around the world and all that kind of stuff. And I feel like I have a new book in me somewhere and all this kind of stuff. So I just have to bang out another year of grad school and get my other degree, and then move on to some more fun things with you guys. And I feel like so this next year we'll build up to that, and that we have this huge community that that's going to gather and multiply and support each other. That's how I feel anyways. So thank you for being in my life. All right, so let's just pick up here. This is where we left off apparently. So let's just pick up here. You can see a bit of a pullback in the Aussie, and that's to be expected, right? Why would that be expected? Well, a couple of things. One, we're in the middle of the range. Is that right, Raymond? The solar plexus chakra is balanced. That's really good. Love that. You know, when I used to do something called Forex Television. So I used to go to their film studio all the time in New York. I used to fly in by helicopter. And like, boom. Mickety Mac D in the house, y'all. Right? So anyways, so I'd walk in. But when you got out of the elevator, so it was just off Wall Street somewhere, Water Street, I think. Anyways, you go up the building and you go up the elevator, and the elevator opens, and there was an office right in front of you. Not the one I was going, but you get out of the elevator, and it was a trader, some sort of Wall Street trader. But he had all these like stickers on his door and posters all around, and like kind of like a whack job kind of thing. And but one day I'm like, you know what? I don't mind crazy whack job guys. So anyway, so I'm standing reading all the stuff on his door, and it's apparent that he trades like financial assets. He's a trader based on astrological signs, based on the star and the moon and all that kind of stuff. And I thought that was, hey, dude, as long as he makes money, I really don't care. And that's what that made me think of, the solar plexus. But I know that has nothing to do with chakras, but anyways. All right, let's move on.com. So, yeah, so we're in the middle. That's what this is. It's 2 standard deviations, right? 2 standard deviations, mean. So we got into the mean, and guess what? And the other way I think about when we do these regressions is that this is really, right? This is really a channel, and this is really a channel, and they're almost separate, right? And then overall, there's a general trend, which you can see is mostly flat. Okay? Right? Mostly flat. So to hit out here is no big deal. So what's going on? Well, what we're hoping for, if I'm a bull, and you can see I bought it, right? I bought it back in here. So, you know, what we're thinking is, you know, climbing these stairs. The first step is getting into the top of the zone, and then probably using the mean as support to break out of that range. That's what a bull would be thinking. Now, a bear would be thinking sell. And that's pretty easy. And you know the sell price. That's super obvious. And there's another one here, right? Right? I mean, super obvious. When you add up this week and next month, right? That's what a bear would do. That's all. That's what a bear would do. So we'll see. We'll see if this hangs on. You can see it's very bearish right now, and bears are taking it down. Okay. Right. I don't think there would be any questions about that. Okay. I just bought it off the bottom. I'm playing next week. I'm playing next month. If I'm too early, so be it. I can't lose money, so forgive me for taking the opportunity. Okay, now we need some good news. Like China says, yeah, we're just messing with you, Trump and the United States and China. Yeah, we are talking. But right now, it's pretty clear that President Trump propped up the stock market over the weekend. Hey, rather have a president props up the stock market than crashes one. And we've had almost every president has come out and dropped the stock market. So I don't mind some dude keeping us rich. That's fine with me. All right. So yeah, we'll see. So if I zoom in now, let's get off the 4 and see if we can keep this going. That's all. Is there any logic to this move? Oh, well, it's a 382 Fibonacci retracement. Exactly, by the way. Did you notice that? I know this is all random, right? Look at that. Am I faking it here? Is that kind of the bottom or exactly the bottom? Am I faking this one? Is that kind of the top or exactly the top? And am I faking that? Is that exactly 382 or roughly 382? Okay. 5A cross up. This market, the way this is, you see how it's toit and it tries to expand down and it's toit again. The market and the trend, you see how the market and the trend are the same thing. Very often what I do is I just remove them. Generally not like this, not physically remove them, but mentally remove them. So if you're like, Wayne, you have way too many lines. I see that we're slightly down to flat. So basically the market's neutral. So you don't need the 2155. And if the market's neutral, there's no trend. So you don't need the trend. So now you're either buying the dips or selling the rallies. And I can see lots of reasons to sell the rallies. So I just picked a side. You know what I mean? I just picked a side. It doesn't really matter what you do. Pick a side. Now you know what your trade is. So, yeah. So that, yeah, that's my, that's my story. I'm sticking to it. Capiche? Hey, by the way, besides Forex, what do you guys trade on a regular basis? Let me know. Besides Forex, what do you guys trade on a regular basis? Gold, oil, Bitcoin, bonds, and maybe other treasuries, stock indices. Do you like DAX? Do you like S&P 500? Do you do Nikkei or Shanghai? What do you guys do? Bitcoin? Crypto? VIX, right on, Jim. VIX in the indices, Bitcoin. Indonesian stock market, interesting, Shug. Gold, oil, indices. Still learning indices. Do you guys flip any individual stocks? Do you do penny stocks? SPX, NDX, DAXI, yep. I don't know ZB, that must be a crypto, huh? Do you do a lot of wheat and corn and beans? Right on. No soy? Oh, well, I guess that's what you mean by beans, huh? Right on. Doing chrome. That's interesting, Raymond. I know someone that bought like aluminum, but a lot, like tons of aluminum, and then got stuck with it for a while. It was terrible. You almost had to sell this Porsche. I'm like, yeah, that's terrible, dude. Oil, top 40 South Africa, huh? What's up, Bear? Big Bear. Debt gold. Futures. Qantas cows, right? What about monkey? Monkey farms. Who was that yesterday? Who was that yesterday? It was funny. I'm sure it exists, but I've never been to a monkey farm. I know a lot of monkey farmers, but I don't know any monkey farms. But it just sounded so cool. He's like, let me tell you, those chimps, man, and their gang warfares. I'm like, oh my god. All right, well, thank you guys for sharing. I appreciate that. Right on, guys. Was it Jeff in the monkey farms? I can't remember. Chinese buyers. Yeah, that's interesting, Raymond. Yeah, like I've said, a friend of mine does many billions of dollars every year selling chicken. All right, cool. Right on, guys. All right. So anyway, so my plan, as you can see, is pretty vulnerable, right? Like, look at my stop; it's above the 50%. Yeah. I mean, what could I do? I tried to take the safest trade I could get, and we'll see if I got this right. But again, I can't lose; I can only win. So I'd like lots of those opportunities. Right now, nice little 5A cross to the upside. You can see the projection goes from 382 to 1382 to even 1618. So I would say that R2 is the minimum target. Minimum. It probably will go higher than that. Probably go to here, which gets us to the monthly target actually. So if I were to draw this, straight out of the book kind of stuff, it would be the up, 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 down, down, 382, 1618. Which is the monthly R2. Or it might be the bottom. Heck, I've been saying that for a while. Yeah, it's the bottom. So that doesn't actually count. That's weird. I'm glad I double checked. That's not the top. That's the projected bottom. That's how weird we are right now. So anyways, that's what Fibonacci is telling us. If it doesn't go up and hit this, don't be mad at me. Be mad at Leonardo Fibonacci. Okay. Algorithm of traders. I was thinking about it, like, since we all trade different things, even on top of Forex, even though Forex brings us together, we're just traders, right? I was thinking like market hackers. Like, we're not institutional investors. We're not the big banks. We're not, we're not these huge giant hedging firms and stuff like that. We go into the market and we find pennies and quarters and nickels, right? And we pull it out of the market, right? So there's big hedgers over here, and there's big institutions over there, and there's big hedge funds in another place, and somehow we're in that market too, but we're we're sort of hacking away and just pulling things out and running. So that's what I'm thinking, market hackers. But I don't know about whackers. That could be misinterpreted. Okay, so anyways, there's the Leonardo Fibonacci, and if that doesn't work, it's because not enough bulls jumped on. As you already know, I'm really playing next week and next month. I don't even care about right now. I've been in the trade for 2 days. I'm profitable. I'm up still 70 pips or something. I'll probably do all right. That's all. Right on. And remember, the funny thing out of all of this, is if I just keep doing this trade and keeping the trade open. So I got knocked out at break even a little higher than we are, and then I bought it back as safe as I could, a little lower than my original trade, but I got back in basically the same day. But remember, if you add up, if I'm open on these positions every day, at the end of the year, on average, I'm making 200 or 300%. Just on interest, right? And the funny thing is, if you just buy at 459 and get out for a small profit every single day, you'll probably make 1,000% a year. And maybe you're only trading an hour a day, right? Remember, if you play, let's say you wanted to buy any of these yen pairs, or you wanted to, yeah, whatever it is, any one of these yen pairs. And let's say every day you're in a trade just before 5 p.m. New York time, and you're only longing because you want to carry. So that's cool. So every day around 4:30, 4:45, you find your long trade for the day and you buy it, and you hold it for an hour or so. One of the things you do every single day is you collect the interest payment, and then you close your trade. So let's say you're up, you make 25 pips a day, but every single day you're also collecting the yield for the whole day. Even though you've only been in for a half an hour or an hour, you're being paid for 24 hours. And of course, on Wednesdays, you're being paid for Saturday, Sunday, and Monday. So you're getting paid for 3 days worth of interest, even though you've only traded for 1 hour. And you can, in most, retail traders, they don't even consider all of that. But at the end of the day, at the end of the year, it's like 500 to 1,000% return on that money you risked every day. So if you trade one standard lot every single day, every day after day after day, it's $10,000 in interest payments. And you're like, oh my God, that does add up, doesn't it? I'm like, it does. If you're trading, So anyways. Well, in this case, for these yen pairs, you're probably only making $2,000 or $3,000 in interest payments per year. But you still, right? You see what I mean? So just food for thought. So there's that one. Here's another one, CAD yen. It's a little better of support, don't you think? It's a little better. It's not, right? It's not great, but it's a little better. You can see up, 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 down, down, buy. This one I was a little more patient on. Cool. It's not even 382ing, but the nice thing is we're not heading down. So it didn't even 382. So what I need now to stay in this trade is oil to go up. And of course, we need to breach some of this resistance. I don't think this is even a 21.4. Let's do this. 21.4, I have to put in add 78.6. Why did it put it down there? Oh, I put it in the wrong spot. I hate these fibby things. Oh, I put it in the description, that's why. So the description is 21.4, but the level is 78.6. Add them together, it gives you 100, and you'll see why in a second. And still didn't do it right. What the heck? I'll look at it one more time. Come on. Oh, because it's point. Oh, stupid. Point 786. Come on. Grow up at MT4. There we go. So it is a 21.4. By the way, this 21.4, you're not going to learn anywhere else because it's not a fib level, but I'm self-taught, and my first probably 3 years, I traded the 21.4 a lot. The reason for it is I came up with it. I said, if we use the 786, what's the opposite and equal of 786? And that is 21.4. So I threw that down because all I did is took 100 minus 786, and it gave me 21.4. So I popped that on because remember at that time I was flipping my fibs upside down. So I trade Fibonacci studies strangely, right? If you learn Fibonacci from someone else, you'll say, Wayne, it looks like you're drawing your fibs upside down. You must be an idiot. Like I could be an idiot, but I'm doing it on purpose. And then the second thing is I came up with 21.4 simply because to me it's the opposite and equal of 786. So I threw that down, and my first 2 or 3 years of trading, I saw this a lot, especially in fast-moving scalping type markets. Right? And then I came up with frequencies because I noticed the first one would be 21.4, And then the second one would be 3A2, and the third one would be 50%. And then I realized that the market had frequency like an oscillator, right? And so I started coming up with these frequency cycles. But of course now other people would call that differently. But again, I'm self-taught and I don't know what the names are. They're just observations I had from the market. But anyways, 21.4 in my observations over the years, I found to be useful, particularly if you're scalping fast-moving markets. You have to also recognize that when I first started trading, there were not any trading books on how to trade Forex. So I had to figure out Forex on my own with no trading experience in any other market. Currency Trader says, hi, what indicator do you use? Hey, if you click the link below the video that says download my chart templates for free, instead of me just telling you, why don't I just give them to you? Okay, currency traders? Just download it. And by the way, I had a conversation, not over the weekend, I guess just before the weekend, with the guy that actually wrote the code. Do I trade with leverage? Heck yeah, Bradley. You don't? Yeah, that's right, Jimbo. Not quite always, but yeah, generally speaking. You know, let's clarify that, Jimbo. Really, what I look for is the sweet spot. That's what I really want. Because sometimes, like we see in like using pivot theory, sometimes when the market is too aggressive, it collapses earlier. Okay? It doesn't give you a pullback, then it hits the target, then everybody gets out and the trend collapses. But that's not really what I want. I don't really want quick money. That's for a scalper, but they also lose money quick, right? 100 to 1 is typical. 50 to 1 in the United States, 40 to 1 in Europe. You know, that's what people use. But Bradley, more important than the leverage. Like if you go to Trader's Way and you're like, hey, I want 100 to 1. You could say 500 to 1. You know, that's ridiculous. If you don't, I mean, you don't need that, right? But a lot of people would even find 100 to 1 a lot. And it's just that's when I first started trading in the United States, the leverage was 200 to 1. Everyone had 200 to 1. And then it was reduced, and then reduced even further through changing of the law. The law gets put into the Farm Bill, believe it or not. But anyways, so let's say there's 100 to 1, and in other countries it's typically lower. I mean, a lot of people might say that's huge, but then that's like saying, what if you had $100,000 on your credit card as available credit, and you didn't have enough money, but nor did you use it, right? Like, let's say you made $10,000 a year, but for some reason someone gave you a credit card with $100,000 credit. Can you afford it? If you racked up the debt, could you afford it? No, of course not. It would take you 10 years, assuming it's an interest-free loan. But of course, it's not an interest-free loan, right? So like that would be death, right? Someone would tell you this is death. Well, only if you do it. But if you have $50 on it that you used of your available credit, you're like, oh, okay. And in particular, if it is low interest loan, you still can't afford to have a 10 to 1 debt ratio, even if it is low interest, but maybe it's lower than credit cards or whatever. So what I'm saying is, a standard rule that I've had in the past is for every 10, oh, sorry, I got this wrong. I used to have this rule, for every 100,000 in cash that I had in my account, I would trade one mini lot. So what's my leverage there? Like 0, right? Even though my account is still at 100 to 1, my effective leverage was 0. But, you know, if I wanted to leverage up, I could, kind of thing. So really what I'm saying then is if you have, let's say, a $5,000 account, okay, let's say, then you should, the most you should possibly be trading is one mini. And then over time, slowly, you should grow your account to $10,000 and still trade one mini. And then when you grow your account to $25,000, you're like, Wayne, at one mini lot, that's going to take me years. Yeah, I know, son. Okay. Then maybe do 2 mini lots if you want. And then you say, well, what's your effective leverage? Well, it doesn't matter if your account leverage is 100 to 1. Your lot size relative to your account size, let's say, is reasonable. Okay. And then when you get to 50,000, trade 3 mini lots. You notice one thing that I'm showing you is you double your account, you keep your lot size the same, so now your risk is 50% lower. Okay? And then you double it again, and it's 50% lower again. Then you get it up to 25, and then you increase your risk a little bit. But it's less than this. And then you double it again, and now you increase your risk by 50%, but you've doubled your account. So every trade over time gets lower and lower and lower as a percentage of risk. And it has nothing to do, okay? It has nothing to do with leverage your broker's offering you. It has to do with the amount you risk per trade, so to speak, okay? Does that make sense? And so if you've read my book, I actually show you how to do that, and you keep growing your account size up and up and up and up, and your risk grows like this. Risk and money, right? And then I show you, if you carry this out for 5 years, you'll be a very, very, very good trader if you've been trading profitably every day for 5 years. You'll have seen a lot of different markets. And by the time you do it for 10 years, you'll have seen every kind of market there is. Up market, down market, with the Fed, against the Fed, all kinds of things, right? You'll have seen everything after 10 years. Plus, every trade will have a tiny, tiny risk profile compared to where you started. So you'll have significantly less risk. You'll be a significantly better trader. Your account size will be like redonkulously big compared to where you started with. And you'll be paying more money to yourself than you ever thought you'd make. You see what I mean? So whatever. You'll get there. You'll get there. Okay. So we got the pig on the move, and notice something different here. Look at our regression channel now. Okay. What else are we playing? Next month, but I prepared you for that early last week. Do you guys remember? Was it last week or the week before? It might have actually been the week before, sort of in this area. I showed you I'm already planning September. So here it is. September just gave you the bottom and has taken off. Right? Imagine this, that you may have already missed the month of September because you're too slow. And you're like, dude, it's not even September yet. Yeah, I know. this was where you were supposed to buy. Okay, and then here's your second chance, right? And now what? So at some point, not out of a fear of missing out, but more of like get on the clue train. These trades are planned out with the future in mind, not the past, right? Amateurs trade the past, professionals trade the future. Bradley wants to know what's how close is your liquidation point on 100 times leverage? Well, yeah, okay. So if you have $1,000 in your account and you go out and you risk $100,000 on a trade, by definition, you're mentally deranged and you will soon be more poor than you used to be. And then second of all, you have less than 100 pips. I would say, depending on the currency pair too, I would say you would be liquidated. My guess, depending on the broker and stuff, my guess is you would have about 80 pips. So I'll say you have about 75 pips before you lose every single penny in your account. Okay. But that's what a fool would do. Yeah. So I know your mama didn't raise you as a fool. So don't even think that way, okay? Right, Bradley? Mama didn't raise you like that. So Bradley, stop asking questions like that, like how much leverage and how quickly will I blow up my account? Those are all the wrong questions. Bradley, do you have what it takes to focus seriously at learning how to trade properly for the next 5 to 10 years? Now, and I use myself as an example all the time. About, I guess it was 6 years ago, I asked everybody in the webinar, I said, hey, how many people, if they realized if they had to spend more money than a Ferrari and spend the amount of time equivalent to a full-time job on learning Forex, and they knew that they would have to continue doing this for a minimum of 4 years, would you do it? And then I repeated it. You have to do it like a full-time job for 4 years, and it's going to cost you the same amount of money as a Ferrari. Would you do it? And everyone said, oh, well. I'm like, look, I just signed up for Harvard. It's 4 years. I'm in an elite program. I'm like, that's it. That's all you have to do. That's all you have to do, guys. If you work your butt off like a full-time job and pay Harvard an equivalent fee of a Ferrari, at the end of 4 years, you get a degree. Well, actually, I got 2 degrees, but whatever. And that's it. You only have to commit the time, money, effort, and sacrifice for only 4 years. And that's how I want you to look at Forex. You're going to have to commit time and money and effort and sacrifice. And 4 years from now, you probably won't be a pathetic trader. But like Harvard doesn't guarantee that, like, hey man, you're going to get a job and a promotion and all this kind of stuff. No, they're like, F you. You get a degree just like that, and you put it on your wall. And when you're done, you'll get another degree, Wayne, and you can put it on the wall over there, right next to your other degree, and you'll have 2 degrees from us, and that's all that you'll get. Okay? But if I'm willing to do that, you should be willing to do that. You should look at this as you're going to grad school. You're in an elite program to become potentially one of the greatest Forex traders of all time. You're just going to have to sacrifice tons of money, tons of effort, make tons of sacrifice, make this a full-time job, stay on course, stay focused, don't chase the rich man's gold. And at the end, you'll come out hardcore and disciplined, potentially worthy of investment. Right? Okay. That's it, guys. That's all you need. That's all you need. When you're a beginner in 2004 to 20,000, okay. So stick with this, Bradley. Yeah, that's all I know when I come out of this. That my degree, yeah, it made me a little smarter and all that, but it confirms to other people on this planet that I'm hardcore and I'm disciplined. Right? Because not only do I get the degree, I graduate with honors, and 50% of the other people in my program dropped out because it's too difficult. Yeah, they canceled my program. It's too difficult. I graduate with honors because I'm hardcore and I'm disciplined. So that's what you need to prove to yourself and the rest of the world. So I hope you look at your Forex education exactly the same. And if you don't, you might just be playing a video game called Forex. Beep, 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 beep. Okay. So this will be important for bulls to stay in this momentum. And if we drop out, it's a monumental failure of the upward trend, and you should probably walk away. So the thing is, where are your next buying points? This is what I'm trying to get you at. Like, in the future, where would you buy if you had the opportunity? And I'd say you probably get, right? You've missed this one. So plan A would be awesome. Plan B would be a failure of this, but not of that. But if anything lower than B, it would be death. Really, anything lower than A would be very suspect, especially if this retracement here happened at a hardcore level of resistance. Because remember, the longer term trend is down. So at any point, you should feel like this could just go wham, right? It's like walking up the stairs and then jumping in an elevator shaft. Okay. Okay. Cool. So let's stick with that one. We'll move on. By the way, that's risk on, right? So this is risk on, this is risk on. But you know I'm a risk on dude. You know that. We talk about it over and over and over again. So, of course, this is WWWD. What would Wayne do? Well, he would do that. So what's another one? Another risk on move is to buy Swissy pairs, right? Do we have any swing traders? Who's in my swing trading group? Where are my swing traders? Where are my swing traders? Jim, Max, Jean-Guy, Ronnie, Franco, Hisam, right? Where's my swing traders? So here's like something we talked about last week when we were up here. Okay. I should actually erase this. I don't erase the whole thing. Okay. Let's do it this way. And do it this way. Okay. Do you guys see this? This area here that I drew? I drew it last week for the swing trading group when we're up at that black X, guess what this represents? Risk on buy zone. That's it. Nice, right? It's nice, right? Kitty Catty's a swing trader. Whoop, whoop. Caddy. Caddy of pips. So we'll see. We'll see if that goes. But this is a step up. We'll see if she goes. See if she goes. And of course, if you're a bear, you're supposed to like wait for the drop. Maybe you got a shot there if you were aggressive on a smaller time frame. That's totally cool. But if you just got knocked out recently, like the last few hours of break even, hey man, you took the shot. Or if you did a front run, Friday front run, right? If you sold it here, anticipation of the move. Now, I wouldn't do this when you're technically in an uptrend, right? That's the whole point of this of this move, is you're technically in an uptrend on this time frame. So over the last couple weeks, but you can see on the longer term there's a downtrend. So I wouldn't necessarily sell this on Friday in anticipation of a move down. But later, like let's say it had done this, and then next week we were here on a Friday and I'm thinking down the following, yeah, I might do the Friday front run then because we've already had a lower low and I'm setting up a lower high, right? In this case, we were here and like this is a bullish zone. So then I colored all this up and the trade plan was to buy it down here and take it north. And of course we pulled out targets and stuff for that too. But nice if you're a swing trader. Take a look at USD Swiss franc. This one I don't really trade, so I don't really want to look at it. All right, let's not even look at it. Euro. Okay, now this one is often a battle between central banks and stuff. This is the one the SNB watches very, very closely and manipulates perhaps very, very closely. So I don't know if I want to get involved in that. But notice the logic here, okay? So again, if you're a swing trader, if you're a swing trader, you know this is obvious. There's a sell zone, and this sell zone predicts not M1, but S2 as a bottom. Isn't that nice? This entry actually predicts this bottom. And there's no joke. It doesn't like sometimes predict S2 or a little bit lower or just above it or sometimes here and sometimes there. No. This entry predicts exactly this bottom. Isn't that lovely? It's cool. Just gorgeous. Like that's what it says. It's like reading notes on music, right? On a music sheet. You look at the note and all of a sudden you hear the symphony. Okay. So anyways, now what do you want to do? Well, we've been moving sideways for 2 weeks. No counter trend has developed, so nobody's buying. So I think the most logical thing is if macro turns bad. So if we go macro risk off. Okay, let's do that. Let's do this as a scenario. If equals macro risk off, then Euro, Swissy down, and this is the first sell, this is the second sell. And to put that into beautiful colors, that's what I would do. If macro risk off. Then, sorry about the, then sell euro, Swissy, and probably right around this zone. Okay. What do you think? Smell like a plan? England, what's up, Rabo? Easy, bro. So we'll stay off that. Doesn't look exciting at the moment because we don't have the market conditions yet. But when we do, that'll probably be a fantastic trade. Now, Aussie versus Swissy is still very much risk off. And looks like we're trying to be squeezed to the next level down off the daily 21. So this is a big deal. Now, the fact, though, that we've hit it and we're re-challenging it really, really, really emphasizes this bottom. So if I'm a risk-on guy, I'm going to really seriously be looking for this now. Okay? Now, what is still likely to happen, let's do this, because I'm talking about market psychology here. What's supposed to happen is this. Okay, that's technically unchallengeable. That's what's supposed to happen here. Okay? And it had the opportunity. It had the perfect entry for 3 days, and we got the bearish engulfing candle. So it was game on. But whatever propelled the market here, and whatever propelled the market here has propelled it again. There's definitely something going on down there. Is it bears exiting? Is it bulls buying? We don't know. Arguably we don't care. I mean, we do, but we may not. Okay, so there is something going on there, and it's a lot of money. Okay, so as someone like myself who prefers to be risk on, that is like a aha moment, because really we're supposed to be down here, and we ain't. So I'm thinking of something like this. Yeah, there's my plan. Who knows, man, but that is cool. That looks cool to me. So now we just got to get the rest of the market. Okay. Okay. And I'll help you guys that say, oh, Wayne, you have too many lines in your chart. You don't know what you're doing. All right. So we'll clear that out a little bit. And boy, that looks a lot like my Aussie yen trade. That looks like a lot like my CAD yen trade. You see? There's a reason there's correlation, because it's the same trade, really. And check this out. I guess I need this. This is the weekly target. And if you hit the weekly target early in the week, you should look for a counter trend trade, right? I know. Amateur hour. I know. Cool. So the thing, though, is do you believe in the analysis? And if so, are you going to get on the trade? And then if so, when? Okay. This could have been very interesting. You might be conservative and you're waiting for, let's say, a high higher than that, and you're going to buy the next dip probably around here, right? Using price action. So really, you're going to buy that one then? Are you ready? Are you going to be ready tomorrow? See what I'm asking you to do, guys? I'm trying to get you to think about tomorrow. Is this your trade plan tomorrow? Was this trade plan yours yesterday? I'm trying to get you to think ahead. See, if you had this planned yesterday, you would be in it now and you'd be profitable. Because yesterday we were up in here. So you're like, well, I don't really like buying that resistance. I need it to come back, maybe around the weekly central pivot, maybe around this old roll reversal. Okay. And so you're like, that would be interesting. And so I'm going to watch this on a 15-minute chart or something. You see? In that case, you'd be long here. Right? Your trade plan was based on, let's say, a 4-hour chart, and you knew there'd be a retracement because there's always a retracement. And then you're like, yeah, somewhere near the London Open, somewhere near the weekly central pivot, somewhere near this technical roll reversal, right? Somewhere you can guess on the time, you can guess on the price, but you were at your charts and you were ready for this, and you took a shot. And that's what you did today. Yesterday you had it all planned out, and then what did you do today? Oh, you were there at the London Open and you were looking to buy. You knew the price you wanted to buy. You knew why you wanted to buy it, and all that. And you're waiting, and you were waiting for the sign, waiting for the sign, waiting for the sign. Boom! I saw the sign. It opened up my eyes. I saw the sign. All right? What the heck is this? Oh, let's click some stupid button. All right. What do you think, guys? Any eyes opened? Any aha moments? I tried to show you every day that you should be planning ahead. Every day I say, here's where we are now. This is what we're looking for tomorrow. This is what we see now. Therefore, this might set something up for tomorrow or next week or next month. What we're doing now prepares you for the future. Right? Is anyone having an aha moment where you're going to change your behavior? It takes a lot of energy to change your behavior. If I ask 166 people to leave a thumbs up, 30% will do it. So now I'm saying, are you going to change your behavior and take control of your trading? Who's going to do that? 1%? A 0.5%? Right? If you can't click a thumbs up, oh my God, change your behavior? That's going to be way too much, right? But you know I'm right. You know looking backwards is not going to make you money. Perennial says, I'm getting frustrated with planning future trades, but I know it's necessary. Well, you know, in 4 years, you'll be much better, right, Perennial? Right? There was a time when you couldn't walk very well, but your mom spent time with you, and you practiced and practiced and practiced, fell down, and you got up, and practiced, fell down, and you got up, and practiced, fell down, practiced, and practiced, fell down, and after a while, you got better. Stopped falling down as much. And all of a sudden, a few years later, you're in school and you're playing soccer and you're doing track and you're like, wow, look at that person run. Look at the footwork on the, like you'll get better. Financial freedom. It's a funny terminology. Sounds like a MLM thing. Financial freedom. Here's like how I would describe Forex. It's your job. There's no financial freedom. You sit down, you make money, and then you go on with your life. And you come back tomorrow, you sit down, you use your brain, put in your time, make your money. Maurice says, is it possible to trade other pairs? Oh, yeah. I stick to the majors because they're the easiest. They have the most liquidity and they move the smoothest, right? But yeah, any of the cross pairs and stuff, sure. Yeah, doesn't it, Raymond, though? Right? Like if you just get your mother and your father and your brother and your cousins to use this laundry detergent, you will have financial freedom. What the hell is financial freedom? Some of the richest people I know are always in need of money because there's not enough, or they're tied up in assets and they don't have the liquidity for new things, and so they do things to get the liquidity. Like, I've never heard of financial freedom. I don't know. I'm not picking on whoever wrote it. It's just a funny term. I've never really heard it. It seems like a dream. It seems like, hey, if you only get good at Forex, you'll have financial freedom and you'll never have to work a day of your life because, you can buy this EA that does all the work for you. And like, dude, I don't know any lazy rich people unless they inherited it, but that money disappears within 2 generations, right? But most people I know that have money, there's no financial freedom. There's no easy days. I swear to you, they don't have easy days. They work their ass off every day. And they have hundreds of employees and all kinds of businesses, like, 10, 20 businesses. And they have homes around the world. Oh, but I got this hotel and I own that hotel. But then, I do this other thing over there and I do this other thing over there. And then I got this and then I got that. They live very complicated, very busy days with very little freedom at all, but they have tons of money. It's just funny that you get rich and life gets easy. Like who believes that? Seriously, who believes that? If you had money, your life's going to get easy. It's really funny. It's quite a dream, though. Anyways, that's why you should get really smart, because once you have lots of money, you're going to have to be smart enough to handle all your money. It's true, though. Like, seriously. Once you have a lot of money, you're going to need to be smart enough to learn new skills, because if you've never had a lot of money before, you're going to be surprised. Like, a lot of things change. You know what? The first thing to change, not always, but much of the time, is your relationships. And probably with your family, too. If you have a lot of money and all of a sudden your cousins are showing up, you're like, hey, okay, I'll help you out. And all of a sudden they're back. And you're like, dude, I kind of feel like you're using me for my money, right? But like, I have friends from college. Some are successful but not wealthy. Some are moderately wealthy, like they have millions of dollars. And then I have other friends that have tens of millions. But we all used to camp together when we were 20. And it's weird where, one of the buddies, he makes $100,000 a year, and the other buddy's got, 75 million in the bank. And sometimes things change, right? Because, one buddy says to the other, like, hey, man, I'm going to, like, buy a plane and fly across the country. You want to go? The other guy's like, no, I can't leave my job, and I couldn't afford the gas, and buy a plane, like, I couldn't buy a plane, like those types of differences in relationships. And it's really, it can impact things. It can. Things drift because all of a sudden you say to your good friend, let's say your best friend from college, you're like, I'm going to go on this around the world cruise. And and they're like, dude, I can't do that with you. I can't just go on a 45-day cruise around the world. And what do you mean it's only $150,000, right? And the other guy's just like, I can't do that. And everyone's like, come on, it'll be awesome. Well, let's go to Monaco. Let's get a yacht, models and bottles. Let's go. And I was like, dude, I got to drive my Uber cab, So what I'm saying is, once you get past this trading money thing, your financial freedom, whatever that means, you got to be smart enough and disciplined enough to deal with bigger challenges that you've ever come across. Okay? Keep that in mind. Like, I swear to you, if you put blood, sweat, and tears for the next 4 or 5 years in the Forex, and you treat it like a full-time job and pump tons of time and money and effort and sacrifice into it, you will get really good at Forex, and you'll start to make money. And then do that for another 4 or 5 or 10 years, and now you'll make more money than you need. Right? More money than you need. But now the real work gets in there. Now real work gets in there. Okay? Trust me. Now the real work gets in there. So this idea that it's going to be easy and you can get in there and make a lot of money, then you'll be rich and you get your yellow Lamborghini and stuff. Like, it just doesn't add up, because those people are not mature enough to have money. That's why they don't have it. Okay? But if you want to start your own YouTube channel, go get a crappy high miles Lamborghini Gallardo that you rent for $1,200 a month, and start a YouTube channel with your cell phone. Like, I just made $600 trading Forex on my cell phone, and I drive a yellow Lamborghini. Dude, it doesn't even add up. Like, how could that even make mathematical sense that they're making that kind of money and driving that kind of car? Like, dude, it's because all you have is the car and that you leased, and it just flabbergasts me that the misunderstanding or misinterpretation, or dare I say even ignorance of money, that's not how money is made. Okay? Yeah, Gallardo. I don't know anyone that would want a Gallardo. Like, are you kidding me? But anyways, it's just funny. Like, we need to retrain all kinds of parts of the brain to be successful in here. And you got to turn off the get rich quick part. Okay? You need to turn that off. And you need to say, I'm going to Harvard. Huh? Look, I'm going to Harvard. It's going to cost me tons of money. It's going to take tons of effort. I'm going to have to sacrifice everything, family vacations, and like, dude, you don't understand how much sacrifice that school has taken from me so far, and I ain't complaining. The thing is, and at the end, what do you have? Something that says, I'm hardcore and I'm disciplined, and maybe smart, but it doesn't guarantee me success. So you're going to have to do the same thing. Blood, sweat, and tears for years, incredible amounts of sacrifice, and at the end, you will be a very good trader. Then, because if you still don't have lots of money, and you shouldn't in 4 years because you haven't been gambling, you've been building track records and stuff. Then after that, because when I get my second degree next year, it doesn't say, money's going to rain out of the sky for Wayne, right? I didn't go to Harvard for money. But even then, it's like, if the sky doesn't open up and say, ah, right? Master's degree from Harvard. No, it doesn't mean jack. But if I'm smart and I'm intelligent and I'm hardworking and I'm disciplined, I can turn that into something, right? So now, if you go through and treat Forex that way, in 4 or 5 years, you'll be a good trader, but you still won't have money. So now you'll have to work really, really hard for another 5 to 10 years. 5 to 10 years from after that, you'll have more money than you can dream of. But you'll have tons of problems. You'll still have to be smart. You'll still have to have work ethic. It still won't be easy. You'll still have to be creative and inquisitive. You'll still have to do the work. There is no freedom. You'll just have money. And your relationships with your family's going to change. The relationship with your friends are going to change. You're going to move to a nicer house in a different neighborhood. So you have 3/4 of your friends won't follow you. They'll stay in the old neighborhood. They don't like you anymore. So now you got to get new friends, but the people in your neighborhood you don't really identify with. So now you got to go out. Like, dude, everything you know in your life is going to change. It's not going to be easy, and it's not going to be a cakewalk. And you better be prepared. And you know what? If you're trying to get rich quick and you don't have patience and you don't have discipline, you're certainly not going to make any money. But if you somehow did, you won the lottery, you're not going to be emotionally or mentally prepared, and it's all going to go away anyways. Through stupidity, but more likely self-sabotage, because at the end of the day, you're going to want to go back to the old neighborhood where you had all your old buddies and all your old friends, and life was nice and easy, and you didn't have all these money problems, and you didn't have to work hard, and you didn't have to have the patience and discipline. You could just run through the neighborhood doing what you used to do. Trust me, it happens 99% of the time. So get ready. The money is the easiest part. And then you can, you save some money so you can continue your Lamborghini lease. Keep that gyro pumped, man. All right. So here we are. This, if you remember, we have been working on this for weeks and weeks. And you can see I have channels, I got regressions, and what did we talk about then? This area, projected top. You knew that in advance. So what did we talk about there? Once we get in here, watch the top. Will it form a reversal? Do you guys remember talking about the birth of a reversal? So remember, when we're rising and measuring the channel and the frequency in the channel, we're talking about in the future, where would the top likely be? We don't know if it will be the top, but where would it likely be using technical analysis? And we said, well, it'd be up here. Okay, so let's watch that. So we watched that for weeks now. And then, right after a triple top or something, we're talking about if a new trend was born, how could we identify it? How could we use our tools, right, to project in the future if a trend reversal happened, what would it look like? What could we use to identify and even recognize that something major has happened, right? And you think a breach below the channel would be it? Very much could be. But that's why we used all these tools. So let's now project the future, okay? How about up and how about down? Is that plausible? Joey, I have lots and lots and lots and lots and lots and lots of trades open, not one big one. So Joey, I want to know, like, percentage-wise or whatever, like, what is the biggest trade you could have on, like, a swing trade? Here's my answer to you. Years ago now, probably 7 years ago, I did my webinar, and I clicked the button to say off, like stop webinar. So I clicked it. And then the webinar was over. So then I opened up my trading account. This is my coaching account. I opened up my trading account. And I checked my positions and stuff. And I'm like, oh, okay, that was cool. And then I'm like, oh, man, I need to do coffee. I need to go take a pee. I just did a 2-hour webinar. So I go take my pee, and I go get my coffee. And then I sit down on my desk, and I'm playing around with looking at my trades. And then I look over, and holy shit, the webinar was still open. And there were like 100 people. Just the chat was like on fire. And they're like, Wayne opened his trading account. And I had way more than 100 open trades. Some of you guys might have actually been there. The older folks, the Rons of the world. Daniel was probably in there. Anyways, I had way more than 100 trades open. Way more. I was up like more than 10,000 bips or something. The floating profit and loss was a lot of money. And they're like, fudge! And I said, oh, crap. So I take the mic, I turn the mic back on, I'm like, oops. People are just like, oh my God, look at her. So then I said, whoa. First of all, I didn't mean for you to see this. And then second of all, I want to point out one thing, and then I'm going to take this video down. Obviously, I can't post it. But I want to point one thing out. I said, look at my available credit. My available margin. And it was 98%. I said, that's how you trade. That's how I'm teaching you. I'm teaching you that these are not lots of dumb trades, and I don't have any trades with giant losses. If you look at that, the losing trades that I have right now are the ones I kind of took earlier in the week, the swing trades that kind of haven't produced yet. And if they don't produce soon, I'm going to have to take the losses on them. But the other 130 trades, they're all profitable. Now that story comes up, I need to make the point where whoever asked the question now, I think it was Joey, I didn't have one big gamble. I didn't put one big trade on. These were all individual trades. Over time, each had a trade plan, but all in the direction of my bias, right? They were all bias-based trades that I technically entered and technically managed the risk on. Okay? So no big bets, just lots and lots of hard work. Now, the next thing I should point out, and this is what I was saying to them at the time too, I'm like, how could I possibly have 130 profitable trades? And am I like a 99% winner? No. I let all my winners run, and the trades that didn't work out, I took small losses on or I broke even on. I'm not in my losers. Why would I be in my losers? But I am in my winners. Okay, 2 or 3 good. I bet you it was more than that, Raymond. I bet you it was more than that. Okay. But I want you guys to take that at heart as well. Don't let your losers run. Okay. It's okay to take a loss. It's shitty to hang on to them out of pride. And that's why I hit so hard on people that are so concerned with win ratios. That is the greatest fallacy and most likely downfall of your career, that you care about your winning ratio. All it will do is put pride in front of logic. You can't take this loss. It will lower your winning percentage. Jump off a bridge. Okay. If a trade plan fails, then the trade has failed. Even if you're profitable, just doesn't matter. If your trade plan failed, get out. Okay? But if your trade plan succeeds, get every pip you possibly can. And so over time, what happens is I move all the stops. It's almost like a trailing tide, right? Like all my trades are up here and here and here, but the stop losses are trailing behind, let's say 300, 400, 500 pips behind everything. Okay. And then one day I exit everything, every trade, gone. But not one gamble. Okay? To Joey's question, not one gamble. Not one. Every single trade, solid trade plan based on fundamental bias, then technical analysis, and then then best entry I possibly can, and then proper risk management. If the plan failed, I probably broke even. Hey, I lost some money maybe. No big deal. Trend is my friend. And then let all my winners run. Let all of them run. Just let them free. And if I get knocked out for plus 50, plus 100, plus 300, oh well, didn't work out. But I want to be in it forever. I want to be in it forever until the market changes. Okay? And by the way, there's a lot of seasonality to that. The stop loss, you click the button. Okay, Bradley? Actually, so what I do, let's just enter a trade here. Okay, this is a terrible place to buy. It's probably a terrible place to sell too. We don't have any move on this. See, the market's so slow for scalping. You know, things used to move so much more back in the day. All right, so let's do this. I'll buy it, right? So you got to go here. So let's just buy it. Way up here because of the spread, okay? And then what? I just set a stop. You see? Thank you, No Name. Okay, you see how I did the stop? It's that easy, Bradley. You move it around anywhere you want. You can cancel it if you want. Add a new one if you want. Oh, my watermark's on it. Okay. Easy peasy, right? And watch this. Watch my stop. I close the order, and the stop's removed. How about you give me step-by-step a way to make cash? You should be a stripper. Strippers make lots of cash. It's true. Hey, you asked. So Beast is working its way up. That's cool. That's all risk on. I think I should probably pull the plug here. It's been an hour and a half. Let's just kind of look around. Let's do, oops, we should do some golden oil. Yeah, but then dope dealers have to buy more dope, right? So they end up spending the cash on more dope. It's like being a used car salesman. You sell a car and you take your money and you buy another car, and you never have any money because you always need money to buy new cars, so you can sell cars so you can have money so you can buy more cars. Strippers just go to the club, dance on a pole, collect a bunch of money, and go home. I guess buy high heel shoes or something. All right, so gold. Do you remember what the trade plan is here? Well, yeah, and Raven, where you're going to, right? Where you're going is you you should have monthly swings, weekly swings, right? Day trade, intraday trade. At the end of the day, you need to do all of this stuff. Okay. But I have met people. I was at a poker game years ago, and there was a cute young woman sitting next to me playing poker. And this is at like a friend's house. This isn't at Vegas or something. Like, I didn't know this person. So anyways, hey, like, so what do you do? She said to me, I'm a currency trader. I'm like, WTF, what are you talking about? Oh, well, my family has been we trade currencies for generations. I said, oh, great. Well, what kind of trading do you do? And like, oh, well, we're fundamentally based, right? And I said, oh, okay, well, so do you mostly swing trade or position trade, or like, how would you describe it? And she said, well, we make one trade a year. I said, you make one trade a year? She's like, yeah, we make one trade a year. And I said, it pays for everything. She said, it pays for our entire family for a year or more. Yeah. And I'm like, with one trade? She said, yeah, with one trade. Your whole family, like your mom and dad, and like mom and dad and aunts and uncles, and like one trade. Yeah. I remember looking at my cards. I don't even see the cards anymore. I don't even know what I'm holding in my hand. I'm like, I think I might be doing this wrong. Sorry, so that's what she had gone to college, got a degree and everything, so she could do the one trade a year with her family. No name? Yeah, you go to fxbootcamp.com. There's all kinds of resources for you to get good. So anyways, the trade plan here, if you're a bull, and you should already know this because we did it last week, or would be a good start, one way or the other. Learning some strategies, sir, in equity for intraday. What my observation is that what I trade strictly according to the strategy, with the stop loss by stop loss triggering, while in the same strategy and on the same other day, the scripts are well given a 3-to-1 target. What are you talking about, Tharish? Tharish, you should just learn how to trade. Or Thrillish. Just learn how to trade. Whatever you're doing seems convoluted. Here's what you need to learn, guys. Identify if the market's going up or down. If the market's going up, you should buy a dip. If the market is going down, you should sell a rally. Everything else, like these 3-to-1 risk-reward ratios of this and that, and then this stuff, blah, 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 you're thinking so mechanical, like you're going to trick the market, and it's because of patterns or something or whatever it is, that you're going to set a machine and it's going to spit out money. Bro, if the market's going up, buy dips. If the market's going down, sell rallies. All this other crap, Thrillish, I don't know what it is that you're buying, but it's redonkulous. It's just ridiculous. Okay, turn the ridiculousness off. Look, this market's going up. You should be buying dips, right? Up, 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 down, down, buy. 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 Up, 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 up. You don't need whatever you're doing. or whatever you just bought into, some weird strategy with this and that and the other thing, get rid of it. Just stupid. Okay? So here's what. If you like what I just talked about, up, 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 down, down, buy, up, 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 down, buy, up, 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 down, down, buy, up, 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 down, down, buy, up, 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 let's try to predict the future together. Maybe, just maybe, somewhere around there'll be a down, down, buy, up, 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 up. I don't know. But it might be very similar to this one, similar to this one, similar to this one, similar to this one, and so on and so forth. Now, if it's not and it fails, well, you got pretty late in the cycle and it comes down. But now we have a new cycle and we'll probably go down, 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 up, up, sell, down, 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 up, up, sell. Come on, you can do that. I know you can do that. I know you can do that. So if you come across anything else in this planet, some YouTuber with an amazing strategy, some website with an amazing strategy that you can pay money for, or an EA, if you download it and pop it into MT4, it's going to make you money while you sleep, it's bullshit. I don't know any other way of saying it. You guys get so distracted. So I apologize for the foul potty mouth. But dude, slap yourself in the face, take a cold shower, and wake up from your nightmare that you put yourself in. It's not even a dream. I'm going to have a yellow Lamborghini. It's not even a dream. It's a nightmare. It's robbing you of your destiny. There is no get rich quick. Just think of it. Just like nobody on this planet, unless they won the lottery, which they're mentally retarded anyways, they're going to give the money back. Or what? They inherited it? Oh, great. They're going to spend their great-grandfather's money, and then they'll be poor. So how do you do it? You work your butt off. You train yourself so you're smart and you're skilled. You work your butt off, and you do your job every day. There is no financial freedom. Yes, you'll make money. There's no freedom. You will work hard every single day the rest of your life, and then you'll die poor and a frown on your face, or rich with a smile on your face, but then there's money left over for your kids and your family and your loved ones, and they'll fight over it, and they'll say you're an a-hole, you work too hard, and you're a money greedy fool or something. Who knows? But you'll be dead. But you had a nice mattress every time you slept. And when you went on vacation, it was nice. And in between all that, you work your ass off every day. Financial freedom. What the heck is that? It's a dream. You want freedom, take control of your life. Because then you say, I want that, and then you buy it. That's freedom, but you're still going to have to work really, really hard all the time and still be inquisitive, and you have to want to do the work. Give me more work to do. Do you understand that if you have a job, that's how you get promoted? I want more. So I'm like, hey boss, I bought this software online. It's going to do my job for me. So I'm not even going to come into the office anymore, but I'd like to make sure that you're still going to pay me a paycheck, right? Like, dude, come on. Okay? So I want you to say, I want the work. I want the sacrifice. I want to go the extra mile. I want more. I want to work harder. I'm willing to do this for years. I'm willing to do this for decades. I'm going to do this till the day I die, and I'm going to love it. And if you don't have that, dude, I don't know where you come from. I don't know what planet you're from. A planet of dreamers, but probably live in a garbage dump. But everyone is dreaming about living in a palace. And then one day I'm going to get out of this garbage dump and I'm going to live in a palace, but I'm not going to work hard for it. It's going to come easy. I'm going to buy some software on the internet, and now I'm going to get out of this garbage dump and I'm going to live in a palace like a king. Like, dude, what are you thinking of? It's such a nightmare that it's robbing you and depriving you and all your loved ones of your destiny of greatness. So I hope you slap yourself in the face, take an ice cold bath, and wake up from your nightmare. And then let's get going, man. You and me. You and me. Let's go. Let's fix this. Let's change everything. Let's take money from the sloth and the greed of hedge fund managers that if they lost $1 million, they're like, yeah, bad day. Let's go to the club. That's going to be for you. I think if you're hardcore, patient, and disciplined, we can make a living off the greed and the sloth and the gluttony of hedge fund managers. More than enough for us. We're not going to beat the banks because they're just providing a service to their corporate clients. And we're not going to beat central banks. They're just managing their economies. But the cool thing is they tell you what they're going to do before they do it. I mean, like, who prints the money for free? That's us, dude. When a central bank says we're cutting interest rates and driving down the value of our currency, shoot, you sell it and you make money. You're the one that prints money. Or you're completely delusional. Completely. Living in a garbage dump, dreaming of palaces, and it's going to come quick, it's going to come easy, and it's going to come on autopilot. Completely delusional. And stuck in a nightmare, and probably the rest of your life, unless you wake up. Come on, be like Neo, wake up, pull the matrix out of your brain. Now let's get going. There's a war out there to be won. I'll see you guys tomorrow. Peace on earth, may the pips be with you, may our profits be above average. Thank you for being a subscriber of Forex.Today. Thank you for being a client of Trader's Way. And feel free to download my chart templates for free. Take care, guys.